This is Alan Bush with the Daily Financial Forecast for Tuesday, September 24th. Global equity prices are mostly higher after a large country in Asia reduced interest rates and reserve ratio requirements. Also, U.S. equity markets are no exception and are also trading higher. Stock index futures have recently performed better than the news, and that is an indication that there may be some follow-through strength in stock index futures. Currency markets, the dollar index holding up relatively well, even though it appears that the Federal Open Market Committee will be more aggressively lowering its Fed funds rate this year. We had the business climate indicator in Germany declining in September, and this was also the lowest reading since January. The Swiss National Bank will hold its policy meeting on September 26th, and the market consensus is for a 25 basis point reduction in its key interest rate from 1.25% to 1%. Also, we had Japan's factory activity easing in September. Interest rate futures markets, it is widely expected that the Federal Open Market Committee will reduce its key rate again at its November meeting. Currently, there is a 49% chance of a 25 basis point cut at the November 7th meeting and a 51% probability that the Fed will be cutting by 50 basis points. So this is a rather sudden shift in expectations, especially after Fed Chair Powell last week indicated that there will not be a series of 50 basis point cuts, but financial futures markets are suggesting that could possibly be the case, at least at the November meeting. Still looks like futures are headed higher, but especially at the short end of the curve, where most of the easing of credit conditions will affect those markets the most. So look for higher prices across the board, but the strength should be at futures at the short end, with the long end futures lagging behind. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.